everybody, this is Gary Dean, and this is our weekend video report for Monday, September 5th, 2016. Hope you guys are having a fantastic long weekend, and let's get started. So the bulls, they love the jobs numbers because they can kind of spin it whatever way they want. And if the numbers are good, then they take it as it's good and they run it higher. If the numbers are bad or they miss, they say that the Fed is going to be stuck, and not going to be able to raise rates, and they run it higher. That kind of, let's say, heads I win, tails you lose situation, yeah, it can go on, but it can't go on forever. That's the thing. It's going to be eventually somebody's going to have to take the other side. It's either going to be, the good news is going to be good news and bad news is going to be bad news. But right now they're still, they've been able to maneuver around. But what we do notice is that, just another day when they gap it higher, we see the big boys selling, where the SPY was minus 408 on the money flow, and in the block trades was minus 358. So they continue to sell these rallies, and if we just take a look at a few things here. This is the daily chart, and this is the pattern that I'm following, where we have the blue, they're all matched up together here. So in my eyes, we're in this yellow right here, where we're going to have a drop down, and it will probably come someplace into the I'm thinking anywhere between the 2080 all the way down to the 2055 level, which would be a test of this moving average. So we have the bearish divergences in place. We have wave counts in place. And if we take a look at the 60-minute chart, we have a pattern that's bearish. And you can see, even though it hit the top of it here, it made a higher high but never touched the top of it. Now, wave structure, 1, 2, 3, 4, 5. So we have 5 waves up. We still haven't, even from when we had this drop right here, we didn't even do a 23% retracement. So there's been no really reset of any of the technicals, because we haven't really done it as far as like a wave count, because we haven't really, even came down to a normal support zone. So we have the bearish divergences in place. We have the wave count in place. We have the pattern in place. We know that institutions are selling, every rally. So when does this all change? It's really, really hard to say, but my take is that it's going to change, sooner than some people are expecting. And the thing is, even, I guess really the best piece that I can, just kind of give you guys is just be careful. Yes, the short side has been terrible, but the 15th was the high right now. We still haven't made that, and we also have a double top pattern here. So, it's just something that just don't become complacent, because we have, everybody that's looking higher, and their anticipation is that it's going to stay up into the elections. But again, what does that mean? Who's keeping it up? Is it what the Democrats are keeping it up so they can get Hillary in? Why wouldn't the Republicans just want it down? All that stuff doesn't really make a whole lot of sense to me on it, and I don't really buy it, because if that's the way it would really work, then you would have all the Republicans and trying to smash this market down so Trump can get elected. So I'm not a big fan of that, and I have a feeling it could end up as some kind of setup. So anyway, you can see never made it into completely oversold levels here. We're at the neutral, a little bit above the neutral right here, and we're above the moving averages, which I really didn't want to see as far as when we moved, because we were trading below the moving averages, and it was used as resistance. But remember what they did, like they do every single time, is they gap it over any kind of resistance. So if history is going to be our guide, every one of the gaps has failed. So we had to gap up. We saw some selling. Are we going to come now and take these lows out? Possibly, because really what they've been doing, if you notice where the highs and the lows, so this low right here, when we took these out, this washed out all of the weak longs. Now, anybody that was short was putting their stop right here at above this high, so they took out the shorts. So it's open for, you know, a move to go to the downside. And like I've said, every one of these gaps has failed, and it just, you know, kind of amazes me that they continue to try you know, this type of playbook. So if we take a look at the 15-minute chart, you can see we didn't make it up to the 78% retracement, but we came close to it. If we get a pop and it comes up to this area here, to 2185, possibly 2188, we're going to have bearish divergences in place. We're going to be very overbought. And again, it would be setting up, because this is where a normal retracement would be, for the move to the downside. So this is, you know, they jump through this this resistance here on a gap up, and like I've said, they've done that on almost every. You know, every time they hit resistance, it's almost guaranteed that they're going to try to gap it over. So you can see the moving averages are starting to tilt up. I would say that really what the bears need to do is get it through the 2172. If we take a look at the 5-minute chart here, you can see the oh, I'm sorry, that's the Russell 2000. Hang on one second. Okay, here's the S&P. So really what the I think the major thing that the bears have to do is they got to push it through this 2171, because that's the 50% retracement. We also, this is the support area. I think if this gives way, it's going to be a very, very fast move down to the 2062, or probably even testing these lows at 2156. If this gets taken out, that's when I believe that we will see the a sharp move down to the hang on one second. This is the I'm just hourly chart. So if this gives way, this 2156, that's when I believe that we have a very fast move to test this 2146. And again, if that gives way, then it's a, you know, it's going to be a water slide straight down to this 2124, and even down to the 2112. And we haven't seen that kind of you know, move to the downside. So the bulls have not been tested, and when that happens, a lot of times, you know, these moves to the downside get exaggerated. So you know, there's really not much more to add. We're still below this high right here. It kind of looks like we're making some kind of rounded top. And we have patterns and wave counts and everything that's bearish, but we really, you know, we need to see some follow through on the downside, and maybe that starts on Tuesday. We'll see. Maybe they kind of gap it up and then give up on it. We'll have to wait and see on things. But like I said, I would just be very, very careful in this market, because like I said, if history is our guide, we've seen these gap ups get washed out. And when everybody has been on the same page and that's looking up, like we're seeing now, that's when they pull out the drop the floor out, and we see everybody trying to sell at once. So with that, enjoy the rest of your long weekend, and I will talk to you guys on Tuesday.